The main difference between actual cash value and replacement cost value lies in property evaluation. Actual cash value is determined by the current value of a property minus the depreciation it has undergone over time. In contrast, replacement cost value is the current value of a property, including the cost of necessary repairs or replacements. Replacement cost value evaluations are generally easier and quicker to obtain. When it comes to the cost of premiums, actual cash value premium coverage is calculated based on the current value of the property, which often excludes depreciation. On the other hand, replacement cost value premium coverage takes into account the current price of the property, including repair and replacement costs, resulting in significantly higher premiums. The financial implications of these two approaches are noteworthy. With actual cash value, the property owner often bears the cost of replacements, as the current value of the property is typically less than the cost of depreciation. In contrast, replacement cost value provides the property owner with the financial capability to cover repair and replacement costs, as depreciation is factored into the evaluation. Consequently, replacement cost value is often considered more economically sensible. Despite their differences, actual cash value and replacement cost value share some similarities. Both terms are used in property insurance to determine property value, and their ultimate purpose is to help insurers determine the appropriate premium coverage in the event of damage or loss. A comparison of the two reveals that replacement cost value has several advantages. It takes into account the cost of repairs and replacements when determining a property's current value, and evaluations are generally quicker to obtain. In contrast, actual cash value has few redeeming qualities, including lower premiums and the deduction of depreciation value. Overall, replacement cost value is the more desirable option due to its comprehensive approach to property valuation and its ability to provide property owners with greater financial security.